Hi, I'm Cheryl Chiasson, President and founder of Commercial Funding Source. Our team of commercial loan specialists save business owners time, hassle, and money by knowing where to turn for the specific type of financing that best meets your needs. My husband and I own a franchise with a building lease, employees, and equipment leases, and understand the importance of managing your cash and funding options. Finding the right funding to start or expand your franchise business can be a challenge. Borrowing money for a business is a completely different experience and process than consumer borrowing. There is no cookie-cutter, one-size-fits-all solution because you, your financial history, and experience are unique to you. There are several types of business financing to start or expand your franchise, each with pros and cons that you need to understand to best position your business. Numerous franchise owners have come to me seeking the right solution for their situation. Let me give you some examples. Sarah's goal was to open a fitness franchise. She had excellent credit and some cash saved for the investment. Rather than wait years to save the rest, she leveraged her excellent credit status to obtain an unsecured business line of credit. This gave her the capital that she needed to resign from her job and fulfill the dream of opening her fitness franchise. Rich owned a profitable business and wanted to open a separate franchise to add to his income stream. He chose to obtain an SBA loan, spreading the payment over several years, rather than drain the reserves of his first business to open a property management franchise. Incidentally, he is in the process of opening a second location. My last example is Ariana. She owned a successful accounting and tax franchise for several years and hoped to buy the building that she was leasing. She needed to turn a loan around quickly or would lose the opportunity to buy the property due to the seller's timing. I approached a lender that I've worked with and knew that I could rely on. We obtained a pre-approval and closed a loan in the short period that the seller required. Needless to say, she continues as a happy franchise owner and now has a commercial real estate asset. Let's look closer at some traditional and alternative financing options. You may be familiar with a home equity line of credit. If you have substantial equity in your home, this can be a good solution for your business financing needs. If you have a retirement fund, such as a 401k, you might consider a ROBS, Rollover as Business Startup. It works like this. You incorporate your business and create a 401k plan for the startup. Then you transfer funds from your existing retirement account to the new company's retirement plan. Finally, you borrow the money from your new company's retirement plan to invest in your franchise, tax-free. Another common funding source are SBA loans. The Small Business Administration does not grant loans directly to borrowers. The SBA facilitates loans through third-party lenders, such as banks and alternative lenders. The third-party lenders provide an SBA loan following SBA guidelines, with the backing of the SBA if the borrower defaults. Lenders charge a packaging fee, a guarantee fee, and probably closing costs. To apply for an SBA loan, you need to submit an application, write a full business plan, generate projected financial statements to show sufficient estimated cash flow, and submit to a thorough credit check. You must also provide a long list of paperwork regarding the owners, including resumes, business license, and a personal background statement. The SBA and lender evaluate the application based on your character, management abilities, collateral, and amount you can contribute to the business. There are several factors to consider when determining if an SBA loan is right for you. They include timing, your cash available as a capital injection, you need 20 to 30%, your industry-related experience, credit history, net worth, and available collateral to back the loan. An unsecured business line of credit offers low-cost financing with the right business credit cards that do not require any collateral, tax returns, or financials. It's important to understand both the risks and the benefits of using credit card financing so that you can take advantage of benefits, including keeping personal and business credit separate, preserving and improving your personal and business credit profiles, maintaining positive cash flow, maximizing tax breaks, and preserving precious collateral. Leveraging stocks, securities, and bonds is another way to obtain business financing. A securities-backed loan or line of credit involves no ownership transfer or sale. Your account is at your licensed top-tier lending brokerage, and you can integrate your existing advisor to assist you. You pay interest only on what you draw. Your base loan rate does not change, and you can trade in your account. Equipment leasing could be part of your financing plan. You may be able to lease equipment in addition to other financing options to spread the costs out over time. Leasing preserves your cash and requires little or no down payment. If you own commercial or investment real estate, you may consider an equity loan. This allows you to cash out against the equity in your investment real estate. Leveraging luxury assets such as jewelry, watches, cars, fine wine, gold and precious metals, and fine art are another way to finance your franchise. You choose from 3 products with this lender: bridge loans, term loans, and sale advance loans. According to entrepreneur.com, while there are infinite sources of financing available to help you launch the franchise, operating a franchise with no reserves and blinding yourself to unexpected problems can lead to disaster. A good rule of thumb: never invest more than 75% of your cash reserves in your franchise. I hope I've given you some helpful information to find the right capital solution for you, your family, and your business. I'm Cheryl Chiasson from Commercial Funding Source, and thanks for watching.